We're going to re-encrypt all the Bitcoin and all the wallets and anything that is susceptible to quantum threat. It's going to get re-encrypted if the holders of the private keys are alive and if they like money. If they're dead, they're not going to re-encrypt. And if they've lost the keys, they're not going to re-encrypt. This is going to be a massive upgrade to network security, and it's going to be a massive deflationary event. And we're going to get the answer to the age-old question, how much Bitcoin's been lost? And if the number is 5 million, we're going to see that the supply of Bitcoin is going to go from 21 million to 16 million, and the price of Bitcoin is going to go up.
Interesting.
Right? And ultimately, the quantum leap, call it the Bitcoin quantum leap, is going to be the best thing to ever happen to the Bitcoin network.
Right now, Bitcoin is trading around $88,000 a level that reflects lingering market caution after a roughly 30% drop from its October peak near $126,000. Traders are watching macro drivers like Fed and Bank of Japan, rate moves, ETF flows, and year-end liquidity, which are all influencing price structure into 2026. Against this backdrop of short-term volatility and bearish sentiment, Saylor paints a very different long-term picture. He says that the looming quantum computing era will force the Bitcoin network to re-encrypt wallets and move coins to quantum-resistant addresses, essentially upgrading Bitcoin's cryptographic security with state-of-the-art defenses that could align with emerging standards on iPhones, Androids, and major operating systems. Holders with live private keys, those who actively manage and protect their Bitcoin, will migrate quickly. Lost keys will simply remain lost. The process, Saylor believes, could take a year or two given Bitcoin's global decentralization, but whales and institutions with billions at stake will act fast. Saylor frames this not as a crisis, but as a Bitcoin quantum leap, a security enhancement, and a major supply shock. By forcing a migration to quantum-secure addresses, coins tied to inaccessible or lost keys would effectively be retired forever. If roughly 5 million Bitcoin are never upgraded to quantum-resistant addresses, those coins would effectively be locked away forever. That would reduce Bitcoin's usable supply from 21 million to closer to 16 million. For an asset whose value is built on absolute scarcity, a supply shock of that magnitude could dramatically reshape price discovery over the coming years, amplifying long-term upward pressure on Bitcoin's value. Let's bring you more clips from Micheal Saylor's latest sharp market analysis.
Today it's trading at 87K. Why did Bitcoin underperform this year?
It's the world's greatest free market in capital. And 85% of the Bitcoin, notwithstanding all of the corporations that have been acquiring it that people talk about, BlackRock and Strategy get all the publicity, but 85% of the Bitcoin is held in crypto OG hands. We can't even identify them. And I talk to the traders, they say that, the derivatives market, the perpetual market drives this much more than spot, which means that $1.7 trillion worth of capital that can be 20x or 30x levered is held by people that we don't know. And so I think that that in the near term, their moods and their drivers drive this market. And I guess that's the beauty of free market capitalism. But I think that the more important point is the last 12 months have been probably the best 12 months in the history of the industry in terms of fundamentals. And it's profound what's happened since December.
What would you put at the top of the list there? I mean, I know we've had changes in regulatory environment, different types of institutional adoption. What stands out to you the most?
Well, let's tick off the highlights of the last 12 months. You have a universally supportive administration, a supportive head of the SEC, supportive head of the CFTC, supportive head of the Treasury, supportive president, supportive vice president. You have David Sachs, go out publicly and say, Bitcoin is a digital commodity, it's digital gold, it's an asset without an issuer. We recognize its special nature in the world, as a technology to propagate property rights and freedom. That happened in March of this year, right? People forget how that developed. We saw the spot Bitcoin ETFs get uncrippled. We had in-kind creates and redemptions. People can now swap their Bitcoin for IBIT type shares and borrow against them and then swap back. That was a big deal. We saw the onshore derivatives market for IBIT get uncrippled. It went from nothing to 10 billion. And then when they actually took the cuffs off, it went to 50 billion. That's a big deal. We saw guidance from the CFTC just last week. You can now trade spot crypto assets like Bitcoin on regulated commodities exchanges in the US. You'll see them start trading on the CME. We saw guidance that you could start to use Bitcoin as collateral, right? Crypto assets collateral against those derivatives contracts and trading contracts. That's a big deal. We just saw guidance from the SEC that it's possible for the DTC to tokenize their entire security portfolio. Yeah. We're talking all the securities in the world moving on the DTC. And the fact that that guidance came from the SEC was a big deal. But the fact that the CEO of the DTC got on X and put out a video saying they're enthusiastic about that was a big deal. Yeah. We saw favorable guidance come out of the IRS and Treasury that made the entire issue of unrealized capital gains tax on crypto assets go away. That's a big deal. We also saw the creation of the digital credit market. And I guess beyond that, I guess I would be remiss not to note that I guess 200 publicly traded companies put crypto assets of some sort on their balance sheet this year. Yep. And we went to 200 companies that have Bitcoin on their balance sheet. So, and I guess last point, my company I think we raised 23 or 24 billion dollars this year.
Yeah. I think you bought more Bitcoin this year than any year.
Yeah. And so I think if I was looking at the industry fundamentals, right? And you remember what we were talking about a year ago, right? You couldn't have predicted any of these things. If I had predicted all this, you would have said you're being too optimistic. And right. I don't think I would have been ambitious, or aspirational enough to predict everything that happened. But I would say it's exceeded my expectations at a fundamental level across the board. We couldn't have a more favorable setup for global adoption and institutional adoption of digital assets in general. And by the way, I've been very Bitcoin-centric here.
Of course.
If we went on and talked about digital securities, you had the head of the SEC saying we expect that all securities will be tokenized on-chain. That crypto task force was a big deal. The head of the crypto task force taking over the CFTC is a big deal. Yep. And I think the embrace and the success of digital currency, the stable coins, is a big deal. Yep. And I just got back from the Middle East, and I met with all the sovereigns and the banking regulators, and and all the digital assets innovators, and it couldn't be clearer to me that as enthusiastic as we are in the U.S. about digital assets at this point, they're just as enthusiastic, if not more enthusiastic. And so I think I think we end the year with just a lot of things to be grateful for in this industry. We expect Bitcoin to appreciate 30% a year for the next 20 years. That is our risk-free rate. That is literally the hurdle rate. I can acquire Bitcoin at 1 times revenue. It's a monopoly on digital capital. I can acquire the world's reserve capital network at 1 times revenue, growing 30% a year for the next 20 years, risk-free, integration-free, overnight, no questions asked. What could be better than that, right? Nothing could be better than that for us, right? Once you've actually established, yourself on the Bitcoin standard, and once you've rotated your shareholder base, right? The important point is not that everybody agrees with me. The important point is that all my equity investors agree with me. Mm-hmm. You see, our company exists to acquire Bitcoin. So if you brought me another option, you said, well, Mike, I've got this great startup and it's going to grow 40% a year for the next 20 years and emerge as a monopoly in the world. And I'm like, okay, that's great, Alex, but it doesn't sound as good as the deal I already have going. Like, what are the odds that you just found the next monopoly on money in the world growing 40% a year for the next 20 years? And by the way, let's say that you're a genius and you found it. What are the odds I can convince all my equity shareholders that it's better than Bitcoin? Yeah, and why would you, and by the way, why would you want to? If you already have a risk-free rate of 30%, if you can buy it at 1 times revenue, and if you can integrate it overnight, why would you do anything else?
If Saylor's thesis plays out, the impact on Bitcoin's long-term trajectory could be profound. A forced migration to quantum-resistant addresses wouldn't just be a technical upgrade, it would act as a stress test that separates active, conviction-driven holders from dormant supply. Coins that fail to move would silently exit circulation, tightening liquidity at the same time demand continues to grow from institutions, ETFs, and sovereign-scale allocators. In the short to medium term, the transition could introduce volatility. Markets may initially price in uncertainty, protocol debates, and uneven adoption. But once the upgrade path becomes clear and widely accepted, confidence could rebound sharply. At that point, Bitcoin would emerge not only as a scarce asset, but as one that has successfully adapted to a post-quantum world, something few monetary systems can claim. Over a multi-year horizon, this dynamic could accelerate Bitcoin's shift from a speculative asset to a global digital reserve, reinforcing Saylor's view of Bitcoin as engineered scarcity. Fewer usable coins, stronger cryptographic assurances, and rising institutional trust would all converge on the same outcome: a steeper, more structurally supported price trajectory, driven less by hype cycles and more by fundamentals that are increasingly difficult to ignore.
The whole message for 5 years is Bitcoin doesn't have employees. It doesn't have management teams. It doesn't have counterparty risk. It doesn't have supply chains. It doesn't have leases to break. It doesn't have Nexus. It doesn't have all of the 30 pages of liabilities that companies have. So why would I want to go and buy 30 pages of liability? Yeah, and here's the point, right? I can build a digital building in 1 day with no risk. Why, you're like, okay, well, I can do this in 1 day at 1 times revenue. You've done it 90 times in a row. And then some dude comes along and says, well, I have a building that's similar that'll take a year to close the deal. And I think it's like a 20% discount, but I'm going to need you to sign up to unlimited liability for the next year.
Right.
And I need your investors to sign up to unlimited bottomless law. Maybe the deal won't close. Maybe you'll get sued for $18 billion of intellectual property rights, shareholder litigation or something.
Right.
Why? It's like penny wise and pound foolish.
That's smart.
Why would you absorb unlimited bottomless liability and distraction when, it's like, don't look a gift horse in the mouth. You get the chance to buy Bitcoin with zero risk, zero integration headache, and you put it out on the wire next Monday, and everybody understands whether the risk profile. You understand, like, if I buy $1 billion of Bitcoin, you're the investor, you can see immediately whether the risk profile of the company increased or decreased that minute, right? And the only difference between the way that a bank handles it and the way the Bitcoin community handles it is because we're global and more decentralized. We're probably going to do this not over the course of 30 days or 90 days. It'll probably take 2 years or 1 year.
Right.
Or some amount of time. But, you're going to argue to me that some dude that's got $1 billion of Bitcoin is going to decide they just don't want to upgrade? I don't think so.
Yeah.
Right? And in this particular case, you could say, the haters, the skeptics, like, well, you're not going to get consensus. Really? Like all the smart people with money in the world that thought it was smart to put their money on the crypto network, you think they're the people too stupid to want to upgrade? I think you're going to get consensus. Like, well, it'll be too decentralized. You know how decentralized the United States government is? Right? You realize how many defense contractors there are? Like, the Walmart supply chain, if you actually look at the supply chains in the world, there's 100,000 companies that are all going to have to upgrade. They're going to figure it out, right? And so in this particular case, there's going to be an upgrade. The network security is going to upgrade. The wallet addresses that don't upgrade are getting frozen. No one's going to complain because the only people that don't upgrade will be dead people.
Got it.
Right? And the dead are not going to complain about it.
Yeah.
And those that lost their wallet, they lost their private keys, it's not going to matter. It's going to be a good thing. And this is just a natural challenge and response. You know, the network is going to be strengthened and hardened by this because intelligent people normally respond to challenges in an intelligent way. The only people that think the community won't are people just hate Bitcoin.
Yeah.
They hate the Bitcoiners, they hate the Bitcoin community, or they have a personal agenda of spreading fear and uncertainty and doubt for some evil, nefarious purpose, generally because they want to sell you something. They want to neg you and they want to make you insecure, so you'll give them your money so they can control you or manipulate you some way. Mm-hmm. And then all of a sudden this came along and I started saying that there is just a profound amount of good that we could do for billions of people if we spread, digital assets, digital capital, digital credit, and we know eventually digital freedom, digital property rights. For the first time in the history of the human race, I think Bitcoin represents the ability to tightly bind economic energy to the individual. That's the most profoundly disruptive, transformational change, in the economic history of humanity. Mm-hmm. It's got a protocol to bind economic energy to a person, a mathematical protocol, and a communication protocol. It's like language and math and economic protocol. It's pretty profound. So I feel responsible for doing my best to preach that gospel, to spread that word. Also to try to communicate to groups that don't see it that way, right? To go communicate to the bankers, make sure that you de-escalate inflammatory responses. Bitcoin represents a profoundly humanitarian, egalitarian, utilitarian, revolution for humanity. That means no government should fear it, no bank should fear it, no corporation should fear it, no mayor should fear it, no institution should fear it, no family should fear it. Nobody should fear it. They shouldn't fear it any more than you should fear fire, math, English, electricity, right? I'd like to see it embraced as it's a profound breakthrough and maybe the biggest engineering breakthrough in the history of economics.
Micheal Saylor explains that many companies trade below their net asset value, tempting private equity funds chasing 10 to 15% returns through diversified bets. These funds handle board seats, hiring, lawsuits, and integrations, perfect for roll-ups if you buy the diversification story. But Saylor rejects it entirely. He sticks to one focus, like kerosene fueling a jet or aluminum in wings, not mixing metals or chipsets. NVIDIA data centers run uniform chips for a reason. When you find the solution, double down. His hurdle rate hits 30% risk-free via Bitcoin, done seamlessly 90 times. MicroStrategy offers STRC, a digital credit product yielding 10% tax-efficient dividends, triple the 4% from traditional credit. Why wouldn't investors dump $100 trillion in junk bonds for it? Saylor says there are two barriers: ignorance and perceived issuer risk. Diversifying into other deals creates distractions, opacity, and a credit discount. Buying undervalued Bitcoin treasuries? Still a headache. Deals drag on for a year, hiding liabilities like lawsuits or IP claims. Bitcoin avoids all that. No employees, no supply chains, pure digital capital acquired instantly at 1 times revenue, risk profile crystal clear. He dismisses quantum threats too. The Bitcoin network will upgrade to quantum-resistant encryption, likely using iPhone or Microsoft standards. Global decentralization means a year or two of rollout, but smart holders, those with billions staked, will upgrade fast. Non-upgraders? Dead accounts or lost keys, frozen without fuss. Haters spread FUD to peddle alternatives. Micheal Saylor sees Bitcoin binding economic energy to individuals via math and communication protocols, the most disruptive economic shift ever. He feels driven to spread digital capital, credit, and property rights for billions, reassuring bankers it's a humanitarian revolution no one should fear, like fire or electricity. As we wrap up, what do you think? How many bitcoins do you believe have been lost forever, and could a quantum upgrade send prices soaring? Let us know your thoughts in the comments below. Share this video and hit the like button. Thanks for watching, and don't forget to like and subscribe.